Peter Rose, Longwood Currency Trading. It's pretty much end of April 2022, and a couple of videos ago, I posted a video titled Cheating the Forex Spread. And thus, the title of this video is Cheating the Forex Spread Part 2. You know, it's an important follow-up to that first one. The first one, you know, we discussed what the spread is. It's the difference between the bid and the ask. You know, if you're selling, if your actual price is 1, then the price that you need to buy it at may be 1.5, and the price that you could sell it at might be 0.5. So you've got a 1-point spread. Okay, that's a spread. The issue with the spread that I brought out in the first video was that it can change. And in some of the major currency pairs, we've got spreads of 1.5 pips, 2 pips, 1.25 pips, something like that. And your broker really controls those because they're going out into the general market and aggregating the prices that the different banks and institutions are offering, and they take the average of that, and they take the high, which is the bid, and they take the low, and that's what they offer you. That's what you're going to pay through that broker. If you go to another broker, price may be different, and the spread may be different. So, but that's just the characteristics of the Forex market, right? Because it's not a centralized market. There's nothing like the government producing the CPI index, and man, that's it. We talked about that the spread could go from 1.5 pips to 4 pips, 8 pips, 9 pips. I've seen it 14 pips. You know, like on a Friday. The example I gave before was a Friday before Easter. Spread right before Easter on that Friday went from 1.5 pips to 14.5 pips within the last 20 minutes of trading or something like that. I don't remember exactly what it was, but it went into the weekend at a 14 pip spread. So if you would have been in there with an order, and it opens up on a Sunday night at 14.5 pips or 17 pips or whatever it opened at on Sunday, you could have got caught. And so that was the issue that I was describing. You really have to watch that spread. When you have an open position and you're approaching your profit target, the thrust of the video was when you have an open position and you're approaching your profit target and you notice that the spread is beginning to widen, then you should just exit, because you don't know what that spread change means. It could mean a volatility increase. It could mean a large institutional trader is going in and dumping a lot of activity. It could increase volatility, order flow. Something's changing. And so if you're close to that profit target, then you might as well get out right away, because if your price just sits there and the spread increases, your order's going to get hit. And if you're long, you're not going to make as much. And if you're short and buying to get out, you're not going to get as much. So the spread rarely works in your favor. So why a part 2? Thank you for asking. Let's go to the whiteboard. All right, so this is the situation that I was faced with the other day regarding the spread. Now, what happened was I had been trading up in this range up in here. I made it was about $600 on some trades, and I just felt that the momentum of price, as you can see here, had this really steep downward type of slant to it. So I figured, well, let's put some limit orders in here to capture what may happen. I may be able to get this. Now, these limit orders are the dotted lines and they're going short, obviously going short. So the dotted lines are limit sell orders, and the solid line here was my profit target, my buy. These sell orders were about 8 or 10 pips apart. This is where we were resting, right in here. When I put those orders in, we're resting about right here. Well, that didn't look too good. Wonderful drawing. So right about here was where I was looking at this stuff. This is a 15-minute chart, and it just been dribbling along here, going nowhere. But we had this tremendous down flush, and I thought, well, you know what? If this could penetrate down here below some structural stuff so that it wasn't going to go up, I could set a series of limit orders here and then pick this up. This was about, oh, I don't know. The average would have been here, and so the average to here was going to give me probably about $720 profit that I was looking at to gain here. And I thought, well, that would be pretty easy because I was trading with some size. I was going in there with fairly good size. So it wasn't going to take me that many pips in order to get that 720. So I set these orders, and I, ended up fixing dinner, and my wife and I were having a glass of wine, and we were celebrating. All of a sudden, my cell phone goes beep, 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 like that. I go, what the heck is that? What's going on here? And I came into the trading platform, and I was $2,800 behind, because what had happened is the price had started to go down. But not only did the price start to go down, which was great, but the spread went from a pip and a half up here to 14.8 pips with the spread. So the price went down to here, picked up all of my limit orders, all of my shorts. I'm heavy loaded here, but it never hit my profit target because the spread was so high. If the spread wouldn't have been so high, I would have been out. But I wasn't, because the buy order was way up here. It was 7 pips higher, and because of the 14 pip spread. So instead of getting taken out, price jacked all the way back up into here, and I was looking at a $2,800 loss. This whole thing, boom to boom, was in under 10 minutes. I'm sitting here looking at this shit, because I didn't get in here for about 5 minutes, and I saw this thing go down. I go, what the heck is that? What's 14.8 pips? What is that doing? I'm not going to do anything. I'm not going to get out right now. And as I continued to watch, it did start to gradually float down. And so I went to bed that night with this open position with a $2,800 loss. Okay? So I get up in the morning, and I come in, and price had come down. Well, this isn't quite to scale. It had come down into here a little bit, and I was showing about a $500 loss this morning. I said, okay, that's manageable. Big difference from the 2,800. And the spread had gone to 2. I said, okay. So my wife and I took my granddaughter, Mia, and the dog, and we went up to hike up Pine Mountain. It's the first time up this season with going up Pine Mountain to look out over Lake Winnipesaukee. And I'm coming down the trail, and I hear my phone go beep, and then beep, 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 and then beep. You know, what is that? So it was about 40 minutes later until we got home, and this is what happened. So the price fell through here, hit my stop, so I got the 720 here. But it was so powerful, the move was so powerful, but the spread held at 2, or maybe it was 3. I don't know what it was because I didn't get home until after the fact. It went through these 3 standing orders because I had set these as 2 groups up in here, thinking I'll take this part, there'll be a retracement, then it'll come down and it'll take this out. Well, it just went, and it took all of them out, and it hit this my buy stop here, and I ended up with a $2,000 profit. So I guess the point of the fact is that this whole area in here, this whole thing that occurred in here, had a 14.8 pip spread. Well, think about that for a second. Okay, I got so jacked up I had to get another cup of coffee talking about that crap. Because something like that will really make your roids flare, particularly when you're trading with any weight, which I was. Now, when you set limit orders like I did, you kind of have to have an if then else type situation, so that if those orders hit, it takes the panic stop that you would have had if price would have worked against you out, because you've closed all those orders. So that was difficult to do in my particular situation because of the volatility. So I didn't have a top end stop. So the danger there was the spread, because it was so wide and the volatility was so heavy, it went down and scooped up those 3 limit orders. So I'm trading 6 full at the time. That thing, fortunately, just went back up to where the price had been chattering on that 15-minute chart. It could have gone 100 pips above that, and I could have been stuck $6,000, $10,000, $12,000 in the hole. That was bad enough that I was stuck at $2,800, but in relationship to the size of the bank that I was carrying and the profit target that I had, I wasn't technically too bad off. And I'm used to that. You know, it's my real estate background doesn't let large price moves scare me. I mean, I've lost $1 million twice in my life, and that was net worth. And I made it back each time because I understand the markets. I understand that price is reactive, and that there's a median that we should be working on. As long as you work on the median and not on the fringes, when you get stuff like that happens in the real estate market and in the currency market, you should be okay. The trouble is, you got to have a bank large enough that when that thing swings against you, you're going to be okay. So even though I lost $1 million net worth, that was the net worth. I didn't lose the value of the building. In other words, I've never been leveraged more than about 40% on any real estate that I have owned. And so therefore, though the price of the real estate, well, my own personal condominium at the time was worth $250,000. And the market swoop came down on that, and everything went down, and my condo went down $150,000 to $150,000 value. I had an agent come over because I was thinking about, well, a year I probably want to sell. What's the price right now if I had to sell? And they said, well, you'd be lucky to get $150,000, $160,000 from a previous value of $250,000. It's $100,000 difference. Divide $100,000 by $250,000. It's not pretty as to what that percentage drop was. I think it works out to about 40%. So I'm used to big losses and the time it takes to recover and all that sort of stuff. It's a little bit different, and I have got myself into trouble in the currency market trading when I'm saying, oh, that's only $3,000 loss. Well, in relationship to the underlying asset that I'm carrying, that $3,000 loss is done in 10 minutes, and it could take months to re-earn that, or days anyway. And so you have to be really careful when you're working in the currency markets and having enough dry powder to withstand really negative moves like that. Or you have to be a day trader and be right there with your panic stop and get out. You know, yesterday I was doing some trading and I lost, I was probing the market. I was trying to get it to go. I lost $125, and okay, I'm out. Just cut it short. That was, I think I had 2 lots because I was staging in. And so I got out, lost $125. The thing looked like it was going to go again. I got in. I showed $125 profit. Then it went $200 against me. This is just, it doesn't feel right. So I got out there. So I'm about 375 or something like that down. And I waited. I said, this really, I really think I've got a trade here. I'm just going to wait. So this is my short stops. People arguing with me about the short stop. No, you just lost $375 on a $30,000 a bank. I was trading 3 fulls at the time. You just lost 3%. Well, yeah. So I made the third trade, and I made $1,000 or $1,200 on that trade, and cleared the day with I think it was a $680 profit for the day over the 3 trades. So you have to have the kind of experience in order to emotionally withstand those losses and to say, okay, I'm losing $125. Some people don't make $125 in a day. And I lost it once. I went back in and lost a couple of $100 more. 2 days of work. I'm 3 days of work on somebody's salary down in basically the 2 trades. I was in them 5 minutes each, maybe. And that's a lot of money. That's a lot of money. So you have to look at it in terms of pips, and you have to have confidence in yourself. I've got a good win-to-loss ratio. I've got a good average win rate. I understand that the trade entry analysis that I do was strong. I've got confidence in this, and I'm going to go in and I'm going to take another shot at it. If you don't have the experience and you go in short-sheeted, you're light in your bank, or you're scared. The third one ain't going to work for you. The fourth one ain't going to work for you. Pretty soon you're panic trading and revenge trading, and you could empty the whole thing. You could go right to the wood. And so, though I may have a good 6-figure account, I may only trade $30,000 to $60,000 of that. When I first went to a larger account, I had a $50,000 account. I wasn't trading $50,000. I was trading $5,000, $10,000. Then I went to $20,000. Then I added money to the account, brought it up to $80,000, and then I would trade comfortably at the 5 full pip, $50,000 requirement margin level. And so I'm always keeping dry powder on the side, number one, to provide me plenty of breathing room if that thing goes $8,000, $10,000 against me. As well as when the thing is really going in my favor, boom, I tack on another couple of lots. It keeps going. Boom, I take on another couple of lots. Oh, it turns against me and it's coming screaming down. Boom, I get out. I'm very careful about where my average level is, and I make pretty good money. But that comes with experience. If you're relatively new to this, if you haven't done 300 trades or have a couple of 3 years experience, and somebody's trying to teach you how to stage in or stage out or compound your account, they're doing you a total disservice. And you are deluding yourself by complicating the process of trying to understand what your entry is, and understanding problems like what happens if the spread goes from 2 to 14 pips. What do I do? What do you do? What do you do if you got caught like I got caught and you find yourself a couple of $100 underwater with the size account that you have? Are you going to panic? You can't. You have to understand through experience how these prices move and what's going on economically in the world around you. Does this movement make sense? Does a 30 or 40 pip spike like that with a 14.8 pip spread, does that make any sense in the reality of what's going on? Well, what happened? I don't know what happened. Could have been somebody misinterpreted some news that was coming out and panicked. It was likely a large institutional trader that just said, I don't want to be in here. I'm just going to get out of my level. I've bought at a really good level, and I just want to get out, and just liquidated the position and took a loss over 20 or 30 pips. Or it could be somebody that says, you know what, I'm going to sell the shit out of this thing because there's a lot of buy orders down here, and I'm going to scoop them all up by buying, and I'm going to get a better price because I really think the price is going to go up. Boy, did that guy get tanked. Wrong. And you know why I'm thinking that that's the way? Because if you remember on the chart, that price the next day, today actually, just went, it went through 60, 80 pips to pick up my next group of 3 pending orders, shorts, and then hit the stop that it was there. It was like $800 or, you know, I think I had 30 pip of profit from the average to where my profit target was. So it was more than that. It was more like 40 pips. So that's, you know, that's a lot of movement. So what happened there? The guy that sold a little bit in order to buy a tremendous amount, because remember, the price went right back up, right? It recovered that 20 or 30 pips. So what that means is that guy sold a whole bunch of shit. Everybody else was getting out of their long positions by selling. That guy bought all that inventory up and then rode that back up. As he bought in, he got a lower price, and it went back up, and he thought, man, I am good. And he sat there as that price then began to flutter, and it went back, it went up a little bit higher. I think I was down, well, there's a period there where I was probably down maybe more than the 2,800, or maybe it was 2,600 when I went in to check the thing. I didn't look at it after that because I didn't give a shit. I said, this just isn't normal. This isn't right. So that price could have gone so that it was 3,500 or 3,600, you know, against me. And that guy's just buying and stacking in all the way up. But whatever happened in the market to continue that price movement down, all of a sudden it turned and it started to go down. And that guy's average value, he had to get out, and he was loaded heavy. That's why that price went, right? And he had to get out. So all that inventory that he had collected, plus all the inventory that he bought before, thinking that price was going to go up on the long term, he had to liquidate and get out. So he sold the whole thing, and that created selling pressure all the way down through there. Because when it got past where my profit target was, and it didn't go more than about 8 pips past my profit target, I had that nailed. I knew exactly how far that was going to go. And price since then has gone on the 15-minute chart. It's back to this jiggling stuff, which means everybody got flushed out. Everybody got cleaned out, and they're there. Nobody wants to act now. Spread right now is probably about 3 because nobody wants to sell. Nobody wants to buy. They don't know what to do. Today's Tuesday, by the way. So, and I'm not publishing this until the following Tuesday. Is the Tuesday after the Tuesday I'm doing this video, because I've done another one in between, right? Because if you're following my videos, you caught one in between the cheating the FOREX Spread video and cheating FOREX Spread Part 2. I thought it important to do this video in order to make sure that those of you who are getting involved in this stuff understand you just can't get in and listen to some of these people about their indicators and all this other stuff, because there's always something different that's going to come up and something new. And if you don't have a good fundamental understanding, if you don't have a good structure behind your trading plan, your methodology, which I call a framework, if you don't have that, and you don't have certain rules that are malleable based on the strategy that you're trying to solve with those rules, if you don't have that all organized sequentially in its execution order necessity, how are you going to be successful? when you run in to something stupid ass like this. And this is not, I mean, well, it might have been a 50 pip swing. I mean, again, it was a lot of money because I was in there fairly heavy. But you have to be careful with how you manage your funds at trade entry. You can't go in with your whole bank unless you're just getting started and you're trading a $1,000 account and that's all you have. You got to go in with 1 mini. But even if you had the capability to trade 5 minis, I would just keep that in case something terrible goes wrong. While you're learning on the mini accounts, don't be trying to stage it. Don't be trying to make money on mini accounts. Don't be trying to make money on a $10,000 account because you're going to get yourself into trouble because you're thinking about the money. You got to think about the pips. You got to think about the sequential execution of the rules that you've laid out in your trading plan with the methodology that trading plan is supposed to be following. So you need to get your shit together trading a single mini lot to get consistent in your trading so that you've got good win-loss ratio. And of course, you go, how do I get a good win-to-loss ratio if I don't know what I'm trading and I'm trading a mini lot and I'm doing the short stops and I'm losing all the time? Well, if you're stupid, you will continue to lose. If you're stupid, you deserve to lose your money. You shouldn't be in the currency markets. So lose a couple of $1,000 and then, you know, I don't know, go quilt a rug or an Afghan blanket or something, okay? But if you're trading a mini lot and margin is $600, you've got $400 of money to play with at $1 a point. That's 400 pips. Well, okay, so you lose 400 pips. Don't you think you'll figure something out after losing $400? Don't you think you'll figure out what to do? Or you'll be smart enough to go find somebody to mentor you that will say, oh, okay, well, this is the mistake that you're making. You know, I have people call me all the time. Geez, I listen to your videos. I do these short stops. I get cleaned out every time I lose my account. Well, either you're not setting your stop right or you're setting your stop correctly, as I suggest, which is a short stop, but you don't understand entry theory, and that short stop's going to get hit every time. It's not the fault of the stop. It's the fault that you don't understand your entry methodology correctly. Go find somebody to help you, because obviously you're not getting it on your own. It cost me $40,000 to learn this stuff. So go spend $40,000. When it hurts that bad, maybe you'll figure it out. You're obviously not figuring it out if you trade the mini lot and you keep losing and not learning anything. Go trade a big account. And when it hurts that bad, maybe you'll stop and you'll think about before you just go following Bollinger Bands and bat fucking patterns and all the rest of the crap that people are trying to teach you. Be leery of a large spread currency pair. And you get that when you go outside of the majors as a normal thing. If you're trading exotics, God, the Taiwan, what is it, Thai baht and the, I don't know, the Mexican peso or something, I mean, your spreads are astronomical and so is your volatility. The volatility tends to be parallel with the spread. But what happens if you've got a 20 or 30 pip normal spread with an ATR of 70 pips or 80 pips, and all of a sudden the spread goes from 20 to 60? I mean, how are you going to have enough money in your bank to keep up with that? You got to trade one of the majors and learn your craft. And once you do that, all you're doing is if you want to trade an exotic or you want to trade a standard cross, all you have to do is change the percentages of ATR to spread, and you'll be all set. But why do that? Oh, I know why. Because you want to combine that volatility and that spread with 200 to 1 leverage. And when you get the entry right, you make $10,000 on a $500 account. Can you do that? Absolutely. What happens when you get it wrong 4 times in a row? You go right through your account. If you get a $10,000 account and you're at 200 to 1 leverage, it's not going to take any money at all to wipe out that $10,000. Any pip move at all. You're gone. You're so far gone you won't even smell it as it goes past. And I'm not trying to be a doom and gloomer here. Currency trading is the most practical trading vehicle that you could possibly imagine. If you go to my website, longwoodcurrencytrading.com, and look at the currency trading menu selection, there's 7 reasons there why I think the currency market is superior to any of the other asset class markets that we have out there, including real estate. Remember, I was in real estate for 40 years. I think I know what I'm talking about. I think I know the difference between a long-term trade and a short-term trade. And I think if you've watched any of my videos at all, you'll see me discuss in detail the difference between long-term trading and short-term trading, where the long-term trading makes sense and where the short-term trading makes sense, and not to mix the two paradigms. Now, when you get into these anomalies of large spread differentials, you can usually predict when that's going to happen. For example, you don't want to be trading, let's say U.S. East Coast time, 5 o'clock, the currency market shuts down on Friday night, right? And so do you really want to be trading at 3 or 4 o'clock in the afternoon on a Friday? Because that spread's going to go to 9 anyway, from 1.5 on most of the majors. The ones that I follow is about 1.5. So just use a little common sense when you're looking at this stuff, but you have to have the right questions to ask so that you know what problem you're trying to solve. Where in any of the educational material that's out there has it covered the spread differential in any kind of detail? They tell you what the spread is, but they don't tell you how to use it or what to look out for. You know, look realistically at what you're going to need to do in order to learn how to trade currencies. You're trying to learn how to trade currencies with a $1,000 account because maybe that's all you can afford. Do you want to trade a $1,000 account and take the risks that you have to take to make 20% of that on a year? As $200 on a $1,000 account, 20%? What if you could double it magically? $1,000? Does that change your lifestyle? Can you quit your day job on that? No. You'll try to take the $2,000 account then and double that to 4. And then you'll take that $8,000 account, you'll try to double that to 16. It might work. And then you're going to take that account and try to double it to 32. And guess what? You won't. Because the emotions are different because you're trading for so much more money. And you hadn't learned to trade correctly. And that will work against you. And so you really are going to have to step back with a piece of paper, figure out what the questions are that you need to ask, go and research everybody as to how they solve those questions, write out your plan, and then follow that plan. Well, that's what I had to do. Except the rules that I was able to come to were the result of my software engineering. I had 33 years as a software engineer. I know how to break down complexity into simple nodes that are a solution to different phases of the solution to that problem, and I know how to sequentially order them and how to pass information from one node to the next so that everything is simple. Most of the educators out there don't know how to do that because they don't have my background. Well, that's why I charge more. You're not going to buy a course from me for $500. You're not going to get a $100 an hour consulting fee from me. I don't need the money. I retired a millionaire from real estate. So I don't need the money. I've got the information, and I'm using that to trade. So far this year, after today's trade, making up $2,000, I'm 24% ahead for the year. And we're at the end of April. Well, I actually still have a week to go. We're at the end of April. And I didn't trade January and February. So basically, I'm up 24% in 2 months. So will I be able to keep that so that at the end of the year I'll have 120% on my account or 80% on my account? Probably not, because there are risks that will overcome your ability to deal with them, and there'll be a $10,000 lost day, I'm sure. There'll be a $3,000 lost day. Don't let that scare you. It could be a $30 day loss for you at your level. But when you trade with size, you're looking for big gains and you're looking for big losses when they get hit. You know, trading a mini account, when I lost that $125, that would have been $12.50 that you'd have lost on the mini account. You have to balance your expectations of what you're going to be able to do. I don't work with people unless they have the desire to somehow sell a truck, work an extra job, to get a $30,000 bank together. You, as a beginner, are not going to be able to take a $500 account and run it to $3,000. You're not going to be able to take a $3,000 account and run it to $20,000. You're just not going to have the skill to do that. Once you get the skill and you have the larger size accounts, why would you want to take those extra risks to try to double that account when you could get a 40% return on a really big account? You learn to get maybe 20% a year on the $1,000 account. You make $200. Where are you going to get 200% on your money, or 20% on your money? And then all you're going to do then, to be safe, let's say you're working with a $100,000 account. Well, then that 20% of that $100,000, that's $20,000. It's the same number of pips that you gain and all the rest of that. It's just that you've got more money. But that $20,000 replaces your day job income for a lot of people. And for a whole lot more people, it's 50% of your day job. If you're living paycheck to paycheck on that $40,000 a year job, and you lose that job, you get laid off for some reason, you're screwed. But if you can learn how to trade, and you have a $40,000 job, and you can make $20,000, that's 50% of your income. Now you lose that job, you've got savings, and you've got unemployment, and you've got $20,000 a year that you're making off of your trading. So now you only have to make $20,000. So you can get a job that you need half the qualifications for to make the other $20,000. Now you're making the 40. Now you're back to even. So you try to grow that $20,000 account, or whatever it is, and go from there. Or the $100,000 account, and go from there. You can do this, but you just really need to understand some really basic stuff up front. And I don't teach that basic stuff. I open my training courses with, this is all the what stuff that you need to know. Go learn about that. Don't pay me hundreds or thousands of dollars to teach you that shit. That's an insult to you. Most of these courses out there, they're charging you $500 for, they're not teaching anything different than you could find in a book or on baby pips. Oh yeah, I paid $500 for so-and-so's course, it was great. Great. Go to baby pips, you get to see the same thing. What are they going to teach you? And the guys that are charging a lot of money, do they really know how to teach? They may have made millions and millions of dollars, but do they know how to teach you? Do they know how to put that together for you so that it makes sense? I took a course, it was an expensive course, from a really respected guy, been on TV. Well, I couldn't figure out how to follow it. He was compounding, he was staging right from the get-go as a beginner course. And not even a beginner course, it was an intermediate, because I took the intermediate level. Wasn't ready for it. Couldn't understand what his opening situation was. He had rules, but how do you match the rules with the dynamics of the current market conditions? When you're looking at his chart, oh, but I can kind of sort of see why he did that here, but how do I replicate that here? It's very, very difficult. If you were going to want to be a chef, what are you going to do? Get a cookbook and learn how to cook that way? No, you got to go find a chef to teach you. You got to take a cooking class. I mean, yeah, you can learn it from a cookbook and have trial and errors, and you're going to throw out more meals than than you're going to eat. I know that for a fact because I learned how to cook from one of the best chefs in the country. So, and I traded him karate lessons for cooking lessons. I had something of value, and he had something of value to swap. So, I know what's involved in learning stuff, and I'm just here to try to help you. But I'm not going to take on hundreds of students, and 95% of them don't want to do the work, and they want to bitch about this and that and the other thing, and I have to drag people across the finish line. I don't have time or patience for that. I want somebody who wants to have a $30,000 bank and wants to work that to a $100,000 bank so that they can not only replace their job income on that $100,000 account, but they can start to build wealth for themselves. Because once you get the $100,000, the next $100,000 is easy. It's difficult to get to the first $100,000 there, but then after that, it becomes easy. And then you can trade with a lot of money and just trade for a living. A lot of these guys that are traveling the world, they're living on $30,000 a year. You don't need a very big account to make $30,000 a year. You could do that on an $80,000 account. You know, most of the guys that are out there, they don't even have that. I mean, you could live in Thailand, for God's sake. I was watching a remote worker video. How much does it cost me to live in Thailand? And it was $1,500 a month, and they were living good, and that was everything: health insurance, food, rent, everything, dog care, everything. $1,500 a month. Jesus, you'd be lucky in the United States to find an apartment just for the rent for $1,500. So how much do you need? That's $15,000 a year, 18,000 bucks a year that it's going to cost you to live. So you need $20,000. You could do that trading on you don't need a $100,000 account because you should be doing better than 20% returns. If you're not doing better than 20%, you shouldn't be trading currencies because it's too volatile, it's too risky to try to push a small account to make 20%. You can make, in real estate, if you got all the training and stuff, you could do that 20% a year appreciation at 8% and cash on cash net return value. You could get that 20% a year easily on a real estate. I got that for years. How do you think I took a 7? I just sold a building 2 years ago. I sold the building. I held it for 35 years. Yeah, I did. I bought it for $35,000, and I sold it for $630,000. How'd I do? So I think I know a little bit about this stuff. And what I like about the currency market is you don't have to have a 35-year wait to take a $35,000 account to six figures. It's not going to take you 35 years if you know what you're doing. So find somebody that knows what they're doing, that you're compatible with, and pay them whatever they want. Because whatever it is that they want, even if it was $10,000, what difference does it make? At some point, you can rapidly pay that off with 6 months of earnings from your account. You go to college and spend $10,000 a year easily, as I was saying on another video. For my daughter, when she was in college, 8 years ago or whatever it was, $40,000 is probably $50,000 a year now. So we're going to invest $50,000 a year. We're going to invest $200,000 a year so that she goes out and gets a job. Maybe she got a software engineering degree or a law degree or something, and you start out, you're making $50,000, $60,000, $70,000 a year. But that $50,000 a year is not only going to continue year after year after year after year, but it's going to go up. The $200,000 gets paid off, and then the rest of it is profits for you. And that's what you can do with the trading, with the education that you're going to spend. But don't just spend it on some asshole that's charging you $500 for a freaking course that isn't going to teach you anything you can't learn for free. Find somebody that's going to teach you something that makes sense and that's organized correctly. Don't email me about how much are my courses and what do you want to do, because the first thing you got to do is you got to fill out a questionnaire form, and we got to work together, because I may not want to work with you. Or I may say, you know what, you just don't have the background that you should be looking at currency trading. You're only looking at currency trading because you want to make money. You need to find something else. Be a plumber. Plumber will make, geez, my plumber charges me $100 an hour. And there's plumbers in my area that are charging $150 an hour right now, 2022. $150 an hour. That's pretty good money. When I was a software engineer, I was making $54 an hour, and that wasn't too long ago. It's a balance between what you're willing to spend to educate yourself and then to train yourself as you work through the smaller accounts, and then gradually build yourself up so that you get to a certain point where you have this hockey stick. You're coming along here and you're making a little bit of money and you're making a little money, and then all of a sudden it goes like that. I guarantee you that's what happens. Because then you can learn how to trade and do all kinds of really cool stuff that'll make you that kind of money. So smile, have fun in your trading, and just figure out what questions you need to ask and what problems you really need to solve and what problems you don't need to solve. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.